Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here we are looking at AMC, ticker symbol AMC, which is currently trading around $2.91, which so far is the low for the day, which is March 13th, Thursday. Happy nearly end of the week. As we can see here now at 291. That, if you all remember, is this gap that I have talked about for many months now. I do have the alert there, so that went off. And because that gap has been filled, and actually I adjusted that level when I touched it there, going to lock it in place. And I'm going to make that line a solid line because that gap has been filled. And that goes back to, believe it or not, the close from May 10th of last year before we saw the big move up. And so it's been about, is that 8 months back in time since we were last trading at this level. The low for May 13th of last year was $3.16. And so, I had said that, my thesis for AMC was that we would actually not come down to fill this gap, that people would be waiting for it, and that anybody waiting for this gap to be filled would be left behind when we do rally to fill this gap to the upside at $6.85. And so now I need to adjust my thesis because we have come down to fill the gap at 291. And so I have some stuff that might be a little bit bearish, but, really, I think it's, just an opportunity. But I also could be wrong about that. So I will, mention that. And effectively, I think that the stock price could be going lower. But depending on what it looks like, I think that could be a real opportunity. And by that, I mean a dip buying opportunity. And so one thing that has really driven me crazy about AMC over the past 8 months, not AMC, the stock necessarily, but the traders, the investors. I have seen so many people bragging, oh, I bought the dip. Oh, I bought the dip. And, then it just goes lower. And so what we're seeing here now with the price being at 291, that is the best dip buying opportunity that we have seen in the past 8 months. And I do think that, it is at this technical level where we have filled the gap. And so I think that this is the dip buying opportunity that we should be bragging about, but also be cautious of the possibility of further downside. And so for me, what I could see with this, since we haven't now filled the gap, my thesis is broken. I would say that the thing that I would like to see is actually a flush down. Actually, I am going to adjust the y-axis for this. I would like to see a flush down, a sweep of the lows, getting people to panic. And then following that, I would like to see a pretty fast reversal. Could be over the span of a day, could be over the span of a week or two, but I like to see a wick to the downside and volume coming in, and then we start to break higher. And so that personally is what I would like to see with my, crummy little doodle there. And right now, what we have seen as the stock price has come lower, aside from, little blip here, we've really just seen the volume fading down. And so that does suggest to me, and I could be wrong about this in my interpretation and understanding of volume analysis, is that as we have been holding approximately, above this level of 291, it hasn't been sellers, people cutting losses with buyers having to step in and buy any drawdown. So that would be a lot of volume, and eventually that volume would dry up and the stock price would go lower. And especially with what we've seen over the past, month or so, we've seen a sell-off in the stock market, 10% drop in the S&P 500. Whereas AMC has actually seen a little bit of a rally, and this fade that we have seen, which actually this might correspond with what we're seeing in the SPY. So excuse me if I'm mistaken on that. But what we see here is, just retesting these lows. So it's really not that bad. I've been impressed with the strength of AMC holding up as the markets has been selling off. But since we have filled the gap, like I said, what seems compelling to me is for people to, be looking at this, say, okay, $3 was lost. And now this gap has been filled and it's still going lower. I'm going to get out. I can't hold any longer. My thesis has failed. I'm going to exit the position. I think that's what some people might be thinking. But I think if we do see a flush down, a sweep of the lows to get weak hands, to get out of the position, I think that would be the dip buying opportunity to be bragging about. And so, it's quite possible we could be seeing that kind of flush down today. Trading is still going on. I got work later today, so I can't do a video after close. But what I would like to see with this is, a wick to the downside, volume coming in, and then a close higher up. Potentially, ideally towards the top. Seeing a hammer candle at the lows here, I think that would be a really, really good look as long as volume is stepping in to push this back up. Right now, volume's diminished. And so, I think that we need to see a signal of a reversal. And right now, we're not seeing that. We're just seeing a fade lower. And with that being said, let's actually look at this. I don't typically do this, but looking at the 10-minute time frame, so just looking a little bit shorter time scale just to see what's going on here with the volume. So we have seen this pretty big drop. We do see higher volume on this 10-minute 10-minute candle here. Volume's going up, so that does suggest that there is some weakness there. But if we do start to see this pick up, we do start to get back to, 295 or so. We've got the, let's see, this is the 50 moving average. So on the 10-minute time frame, that's the 500-minute moving average in yellow there. I'd like to see a close above, that's at 294.5, let's say 295. If we get a close above 295, at or above 295, I think that could be suggesting that the bottom is in here. But in all honesty, in all reality, I think that we need to see a flush lower, volume stepping in, pushing that up, and then we get to start seeing these moves to the upside. And so levels to the upside, I do have this purple downtrend drawn. That is, going to be right around a price of, where that 21-day moving average is. If we do move forward into the future, that is going to be at 325. So that could coincide with some resistance with that purple downtrend. The 50-day moving average is at 338, but that does seem like a pretty big jump straight up a vertical line to get to that level of potential resistance. And so that purple downtrend is based on, I believe this is, let's see, June, do I remember? I think it's July 1st. June 6th, sorry, memory. I haven't looked at it in too long, in quite a while. But so June 6th, the high there was at a price of $5.96, really putting in the top of this range that we were trading in for so long, between $4 and $6. And so that downtrend, the other pivot point for that being the high from August 1st. And we just see that was very notable resistance here, did get a fake out break above it. And the thing that makes me feel very cautious with AMC at this point is that when we were above that purple uptrend, that's when we got the announcement of the dilution on the morning of December 6th, which I believe was a Friday. And so we were above $5 a share the day before. Max Pain was $5 a share. we effectively got rugged with the possibility of a gamma squeeze or gamma ramp starting to happen, closing above that week, which would have been the max pain of $5. It might have actually been $4.50 that week, but we, started to sell off. And the level that we ended up, that AMC sold those shares at to raise capital, was this green line here at 368. That does correspond with the top over here. It looks like on February 18th and 19th, did get some wicks up to around 377 and 373 there before pulling back, coming down. Let's see, about 23% to where we're currently trading at now, below $2.91. So that gap has very clearly been filled. And so, yeah, I mean, I feel like it's kind of tough. This to me is like really bittersweet that we got the announcement of dilution here and that we sold after, trading for more than half a year in a $4 to $6 range. We raised capital below $4. We raised capital at $3.68. So I find that to be pretty discouraging. And, really, whenever we do get above 368, that's kind of, a caution zone, because if we raise capital above that level before, we might be doing it again. So very good to be cautious about that. But I do think that we could start to see some volatile moves to the upside if we really do, start to pick up some momentum and aren't just fading lower. And so I think that could be triggered by a big wick down either on the daily or weekly time frame, and then a close above. So that would put in a hammer candle at the bottom, and then we start to rally. But, these are some of the near-term levels of resistance, ranging from 325 up to 368. And then above that, we do have the 200-day moving average, which is currently at $4.38.5. Also $4.20, just being a fun level, throwing it out there. And then, of course, getting back up to $5 a share where we got rejected over here. Also corresponding with that orange uptrend, which, like the purple downtrend, was notable support over here when that purple line was resistance. This orange line acted as support, and that goes back to the low from May 31st. And the low, I believe, from August 5th when the markets gapped down. That was a historic day in the market. So support over here with that orange line, and then resistance over here. So that could be a tough one to get above. And at this point, that would really just be, $5 clearly lower than that uptrend. So getting into the $5 to $5.50 range, there's probably going to be some resistance there. And so I have it drawn that we break above that orange uptrend, pull back and retest as support. What might actually happen instead is that maybe we consolidate in the $5 to $5.50 range, form a bull flag before breaking above. And then I think we would need to get a retest before going higher. Do have that gap, as I had mentioned, at a price of $6.85. That does need to get filled. At some point, I suspect it will. Ideally in the year of 2025, maybe in the summer, we get a blockbuster. Who knows? And then above that, I do have this level marked here at 1143, and that did previously act as a very good predictor for the top here when we hit a high during market hours on May 14th of 1188. I personally did not sell there, but that was a level that I had marked up there. I should have, at least trimmed some to then, double those shares down here, double that portion of my holdings down here, but I didn't do that. And so that level that was marked based on the high from November 6th of 2023, high of, $11.43. And so that's how I have that marked there. And, it does look like there's a little bit of a, valley here. So maybe this is a little micro left shoulder. We have a head here, and we have not yet gone to the lows of 238. So maybe this is just a massive, hunchback shoulder, right inverse shoulder over here. And so this could be, believe it or not, a very ugly inverse head and shoulders pattern, which from that, let's see, if I do take a measurement from the base of that head at 238 up to that approximate neckline, be in the middle of that measurement, then we could see where, the move would be to the upside. And that would be getting price up to around $20 a share. And coincidentally, we do have this gap. Oops, gotta zoom in not so aggressively. We do have this gap up there at 1960. So if we do move up to around $10 or $12, I think that we're probably going to see some resistance around there, and also, like I said, between 5 and 550 once we get up to fill this gap at 685. Hopefully that starts to act as support, especially above that orange uptrend, and maybe we consolidate around there before getting up to $10, $12 a share. And then that I suspect we would hang out around there for some time, because it has been a pretty notable resistance where this yellow line is in the past. Over here, going back to August of 2023, we did have a lot of resistance there, and then getting up to levels beyond that, 1660, and then of course around 20. I think that could be the measured move that we do see, but that could be over the span of the next year or so. So good to have a long-term plan with this one. And so I'm not even going to suggest that it could come up to this red line here at 36.97. We first need to get above 5 and hold that. We haven't been able to do it. Once we do that, then I see this gap here at 685, also corresponding with being above this orange uptrend here. Once we hold that, that's the second thing. Then we could see a move to $10 or $12. Once we hold above that, or maybe we squeeze past it, who knows? I think that $16.60 to around $20 will likely be the next top, like we saw over here on May 14th. So, whatever you do, have a plan for that. Whatever you do, have plans that these levels of resistance that I've talked about are probably going to act as resistance. 5 to 550, probably going to be some consolidation there. Getting beyond that, around $7, that might act as some resistance, but hopefully we blow past it, and then that acts as support before we go higher to 10, 12, and maybe 20. And yeah, before I forget, I was about to shut down the video. I wanted to pull up the max pain. So this is from Unusual Whales. We can see the max pains over here for the next few weeks. So tomorrow is Pi Day, March 14th. Max pain is 350. With current price being around 291, we're probably going to close below max pain. So I don't suspect there's going to be any volatile moves to the upside this week or next week, because we're below max pain. Max pain for next Friday, March 21st, is 350. Again, I don't think that we're going to be squeezing because of a gamma ramp or gamma squeeze, getting above max pain and closing well above it. But the weeks after that, and these numbers are probably going to change, but March 28th, April 4th, 11th, 17th, and 25th, max pain is all $3 a share. So with it now trading at 290, we're below this gap. We're below $3 a share, so it doesn't seem like that volatile move is going to be happening in the next 1 to 2 weeks. But, I think that we could be seeing in April some moves to the upside if we start to really put in a bottom. I'd say a weekly candle with a big wick to the downside, close at the top or near the top. That's what we want to see. And right now, we're not seeing it. And so I think that we're going to have to wait a couple more weeks for the potential for that. And then we start to, get up to and approach $5 a share. That is going to be a very, very important level for us to hold above. And if we get up there and there's an announcement of dilution, this is just such a, I'm sorry to say it, red flag. Because we've got a lot of debt, we've got to pay it off, we've got to service it. I understand that. But the stock price isn't going to go up unless we let it go up. And if by diluting 50 million shares, at 368 isn't enough to keep us afloat for at least a year, this is probably going to keep fading. So let's look for that weekly wick down, close above in the top side, and then starting to close in April, weekly Friday closes above $3 a share, and then I think we could start cooking and getting up to $5 a share. So that's what I'm looking for. And right now is not the time to be scared. Now is not the time also to be bragging about buying the dips, because that's what everybody's been doing over here. But if there was a time to be bragging about that, if there was a time to be doing that, it's at the 8-month discount that we're seeing right now at $291. But, as always, you got to do you. I'm going to do me. And, we'll just share our ideas here. I'll be doing Ticker Request Live Sunday at 9 p.m. Eastern. So join if you want to chat about where AMC closed the week. Happy to take requests and chat with you live about that. Ticker Request Live. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, you guys, and take care and trade safe. Trade your plan. See you later.